This is the Let's Get Real Estate Show with your host, Danielle Chason.
Full-time investor, strategic consultant, motivational coach, sought-after speaker,
and host of your number one real estate investing show, Let's Get Real Estate,
where real people are doing real estate.
Recording.
Okay, yeah. Okay, so I love all of that. And the fact now that you're doing the land development and as you're growing and scaling your business, you've only focused primarily on the land development for institutional and selling to builders. But now you're looking at potentially even being on the project on the build side. So I'm curious to know, when you're doing that, obviously you need a lot more money. I know you're working with institutional lenders already just on the acquisition of the land. To do the project with the land development, but now you're leveling up and you need a lot more money in order to do the build. So what does that look like when you're working with these institutional lenders and family trust companies?
That's a great question. And I'm going to even expand on it a little bit and say those institutional lenders are coming in far before I get to the build. They're coming in at the size of deals that we're doing right now. They're coming in right at acquisition. So generally right now I'm working on deals between 50 and 100 million. And so these institutional lenders, they come in right from the start. And there's two kinds of institutional lenders that come in. Some, they really prefer to focus on deploying their capital to the development phase. And then there's other kinds of institutional lenders that they want to go all the way through. They like to grab the asset at the raw land phase and go all the way through to build, and then they keep it in their portfolio. So there's really two kind of flavors of institutional lenders, or I'm going to not even call them lenders, institutional investors. And so the experience of working with institutional investors has been fantastic. These kinds of entities, they do a lot of their own due diligence, which actually helps me in my due diligence. They're professionals in that they look at these kinds of deals every day, all day. So when I come to them with a deal, all they need to know is these numbers, these metrics. How did you de-risk this? It's very professional. It's very clean. And when you check all the boxes, it just happens. Because at the end of the day, these companies, they have enormous amounts of capital. They must deploy it. Like when you and I are sitting around and we have, whatever, a few tens or hundreds of thousands in our bank account, and then inflation goes to what it is, it's not that big a deal. But when there's $50 million sitting in a bank account and inflation goes up, that's a problem. That's a real amount of money that's disappearing every month. And so for them, it is important to have this capital deployed. And so they have goals, they have targets, they have different risk profiles and lengths of projects that they need to deploy their capital into. And when a project that I bring fits in with their goals and their institutional thesis and everything else like that, their investment thesis, then it's just a great fit. And they love to be able to deploy their capital to projects that really make sense. And there's also other kinds of considerations like ESG. And so ESG is like, it's like a more responsible way of development, and it brings in things like the net zero and the carbon neutral thesis that's required for lots of these institutional investors. So industrial is a really good way of hitting their ESG goals as well. So all of that creates a really good synergy, and they really help with the development of these projects.
And what does ESG stand for?
Environmental, social, and what was the last one? I forgot what G stands for.
No, that's cool. I just hadn't heard that before. Yeah, that's awesome. It's mostly about energy efficiencies in the buildings, right?
Yeah, so it's not only environmental, it's also like social. Like these things need to be, it's governance. So it's environmental, like these buildings and just whatever developments, they need to be environmentally conscious. And so net zero, carbon neutral, there's LEED certifications that hit that. Socially is like these developments, they need to be conscious of the social impact that they have. And then G is governance, like having equitable governance and having diversity governance and things like that. So all of those three things are like these big institutions, they have mandates to actually only invest in projects that hit these kinds of goals. And industrial is a fantastic way to do that.
Wow, I didn't even know. That's really cool. And that's really cool that the larger institutional ones are actually making that a mandate within their organization, because that pushes the builders to do that and not just look at cost efficiencies, but also consider the environment and all these different, social aspects that we really should when we're, building our communities. So I love that. Now, when you're dealing with institutional lenders, what is it that is required by them from the borrowers in order to make the project viable? What are the things that they look for?
So I want to be really clear. There's two kinds of entities. One of them is institutional lenders, which would be more along the lines of banks and things like that. And then there's institutional investors. So those are more like life insurance companies, hedge funds, family offices, that kind of thing. So the lenders look for the very similar kinds of things that you would think of when you're doing like a big commercial, like a big apartment uh, developments. So they're looking for the cash flow, what's the debt coverage ratio, those kinds of things. The investors, what they look for are a fit with their criteria. So their criteria are things like this is the length of project that we want to be involved in. These are the annual returns that we're looking for. Here's a risk profile that we're looking for. Maybe there's a geographic area that they focus on developing in, or they're focusing on deploying capital into a particular region, or they're focused on a particular asset class. As it happens at the moment, the only two asset classes that the vast majority of institutional investors are currently participating in is maybe 20% are doing some form of purpose built rentals. The rest are doing industrial because they've come to the same conclusions that I have, or let's be honest, I've come to the same conclusions that they have, which is in terms of development right now, like raw land development. These are the only things that pencil out in a very favorable, like risk adjusted returns kind of way.
I love that. Now, the other thing we had talked about was self storage,
Hmm.
and self storage falls into that industrial category, right?
Hmm.
How do you when I think of self-storage, I don't see that as being a big warehouse and industrial section of town, because I see them popping all over the place. So how do you go through the land development process to do a self-storage in a residential area, or maybe a commercial corridor rather, and turn that into like a self-storage unit? Like, how do you look at those pockets?
Yeah, it's a great question. So self storage is its own kind of thing, and the reason that it falls into industrial is because some cities consider that the industrial zoning includes self storage. In other cities, self storage is part of a different kind of zoning, and that's actually very important for what you're bringing up. In the cities where they consider self storage to be part of the same kind of zoning as industrial, it's very difficult to actually have those self storage units be in the middle of the city. So you'll see like that kind of thing in Toronto. Like you'll see self storage right in the middle of the city, but that's because zoning for self storage doesn't fall into industrial. It falls into commercial in Toronto. But in other cities, like for example Fort Erie, it falls into industrial, and generally industrial is relegated out into the more the outskirts of that kind of city. So that's changing, and it's going to change. The one thing that I will say about self storage is that it's a highly localized kind of market. So with self storage, you're only really sensitive to probably the 10 kilometer radius around you. So every 10 kilometers, you can think of it this way: every 10 kilometers, it's another market, and it's highly sensitive to supply and demand. And so developing self storage in cities that are a little bit hostile to industrial or rezoning or self storage, it's highly risky because somebody else might come in maybe 5 kilometers away in a slightly worse site, but they can get it done faster. And so that changes how quickly you can develop a project, which changes the viability of the project. So self storage is something that I have on the back burner. It's something that if I run across a site and I see that that's actually the highest and best use for it, I will go for it because I do believe in self storage in the long run due to the incredibly low cost of construction. And so it's very easy to get, or it's relatively easy to get a high capitalization rate, like a high return rate with self-storage, but it's also a little bit riskier because it's easy to get into. And so other people can get in, which really messes with the supply demand in an area. So proceed with caution, but it's a great asset class as well.
Yeah, well, as you know, and I know, the whole self storage buzz has been going on now for the last 18 months or so, and it's just ramping up. So I could see, to your point, what you're saying, how with everybody else also building self storage and having a relatively easy point of entry. So a lot of people are doing that, how having multiple units really dilute that market. So because the
Yeah.
population isn't going to grow as fast as these units are being developed. So yeah, that's a great point. But I'm curious about how the institutional lenders and institutional investors, and thank you for clarifying that. That's a great point to know the difference. But how would they be looking at self storage as well, since it's kind of institutional? Are they favorable with that?
Um, so on the institutional side, it's difficult for me to say that they would be more or less interested in this because I haven't gone to institutional lenders for these kinds of projects, and the reason is they're not actually, they're typically not big enough. So when I'm looking at institutional lenders, I generally look at them when I need more than like 30 million to get going, and generally self storage doesn't cost that much to get going. So are they looking at it as something to pick up when it's done? Yes, absolutely. There are REITs, like real estate investment trusts and funds that focus entirely, like their entire portfolio is self storage, and for them, they pick these up for sure. Most of these big like hedge funds and like insurance companies, those kinds of guys, they're not picking up self storage. They're generally too small of an asset, and it's not that it's too small, like it's offending it. No, it's just that when they have like generally they'll have between $1 and $4 billion to deploy. It's very difficult to deploy between $1 and $4 billion, like 20 million at a time. It's just like the amount of work that it takes to deploy that capital isn't worth their time. So they need projects that are much bigger. So that's why like the 30 to 50 is like generally the entry point to get into some of these, into like get in front of some of these investors.
Well, that's a great point that you bring. When you're raising capital for your projects, know what type of lender that you're reaching out to, who your target lender is, because you don't want to go out to these institutional investors and they're like, yeah, it just doesn't work. And then you keep getting the door slammed in your face and you don't know why, but it's because you're targeting the wrong people because they just have bigger pockets and you're not realizing that. So that's a great point too. I love that. Um,
If I can add to that, it's like
yeah.
the concept of look for the people that are looking for you.
Look for the
That's
people that are looking for you. I'm gonna write that
yeah.
down. I love that. Um, yeah, so if because you're doing projects with because you've done also self-storage development too, right? So you're looking for projects that sometimes you need institutional lending, sometimes you need maybe private lenders. And so how would if I was a lender and I wanted to reach out to you, how would I reach out to you? Or there could be institutional lenders listening. How would they reach out to you to make that connection?
Sure. Email is good. YVL Properties. It's same as my website, yvlproperties.com. I'm on Instagram, YVL Properties.
Yeah, love that. Socials is always the way to go these days.
Yeah.
We'll
Yeah.
have all of that information in the show notes down below. So hang tight. Now, I know there's also a lot of people out there that are constantly looking for deals and they might come across some land that might be interesting to you. Is that something you would be open to if they had land, but they weren't in that? Maybe is there like, a way where you could have like a referral fee, or maybe they could do a project with you if they bring you the property? What does that look like? Are you open to that?
Oh, absolutely. Yeah, like people are talking all the time. I get reached out to all the time because, at the end of the day, there's not a lot of people that are doing what I'm doing for now. And so, yeah, if anybody's coming across some land and they're like, I don't know what to do with this, or this is too big, or whatever it is, yeah, happy to have a chat, see what we can do. Happy to take care of people. Honestly, at the end of the day, when we all win together. And if I can help out somebody else developing land, or I can pick up something that makes sense, yeah, absolutely happy to help people out.
Yeah, I love that because like I know like there's myself and there's a lot of other real estate investors that are looking for land maybe for, maybe residential development, but it doesn't work. So then knowing that you're there, they maybe I'd be like, "Hey, can you check this out? Would this work for you? Is there something we could do here together?" So I love that. You're an abundant thinker like me and I love that.
Yeah.
So we're going to sign up. Sorry, go ahead.
Yeah, I'm going to add something to that. So if there's somebody who's doing residential development, it's actually very advantageous to have residential and commercial development happening in proximity to each other. And the reason is that people that are developing residential, they want to have a place that those people that are going to live there can work. And that kind of more local economy is very attractive. And same in, vice versa. So when I'm looking at these industrial sites, typically I will put a huge premium on industrial sites that are in close proximity to residential neighborhoods, so that we can create that synergy between residential and industrial development.
And I think to your point, I think the cities, they had an old way of building out the cities before where they kept it very separate. But now that whole thought process has changed. I've seen it out in Vancouver too, actually, where they're doing that. They've got like massive, and even farming stuff. They're bringing agricultural in closer as well
Mm-hmm.
into residential. So I love how they're kind of bringing it all together, and that we can all feed off of each other's industries. So that's a great
Yeah.
point. It's a great point. So we're going to sign off, but before we go, I got a couple of questions that I like signing off with.
Sure.
I am curious to know, what would you tell your 20-year-old self? So if you, knowing what you know now, and you could go back and have a conversation with you before you even started, what piece of advice would you give yourself?
Buy real estate.
I love it. I love it. That's it. Nice and
I don't know.
simple.
Yeah. When I was 20, what's that, 17 years ago? So, oh yeah, definitely buy real estate at that time.
No kidding. No kidding. Yep. That's definitely what I would tell myself too. I love that. And so what's next for you? What's next?
Bigger.
Bigger. You
That's really the answer. Bigger. So right now I'm working on pieces of land that are somewhere between 50 and 100 acres. I'm focusing on Southern Ontario at the moment, not necessarily because I must, but because the numbers work. There are other opportunities in other parts of Canada that I'm looking at. I'm also looking down in the United States right now for other opportunities. So what's next is bigger, other areas. Also, if I'm honest, the industrial, just like everything else, works in cycles. And so there is going to be a time where the balance shifts over to something else. And so I'm constantly keeping my eye out on these more macroeconomic influences and seeing what's going to make sense next. Is it going to be? I know that health right now is a huge thing. So like health sciences development is actually huge right now. We heard about the boom of long-term like nursing care and those kind of homes. I think that cycle's gone. We heard about self-storage. We know that that's kind of peaked and it's on the way down now. So it's always keeping an eye out on what's going on next. What is the next thing that's going to be interesting these institutional investors, and what's the next thing that builders want to take on, and filling that void between those two.
I love that. Yeah. And watching those macroeconomics and seeing where the trends are going are really key about staying in front of the pack in order to
Yeah,
set yourself up for success. So,
exactly.
listen, Yakov, I love everything you brought to the table today. It was a very different conversation that what is traditionally happening out in real estate right now. So I do love that you're bringing this to the table, keeping us at the front of the pack with you, and sharing your time, generously sharing your time with us. So again, if you guys want to reach out to Yakov, you can find him on Instagram at YVL Properties. His website is yvlproperties.com. We'll have his email address as well, all in the show notes. So if you want to reach out, feel free. And with that, we're going to sign off for today. This is Danielle Chason for the Let's Get Real Estate podcast. And it's where we're bringing you real people doing real estate. Bye for now.